Happy April, happy Q2. Wow, the last 3 months have been a little bit of a whirlwind. So what better time to talk about how that affected the real estate market than our Q1 roundup here. We've had, economic uncertainty over the last few months. We've had changing policies in Washington state. We have had the tech sector be a little bumpy. So how does this affect the real estate market? Well, what we are going to talk about is from a distance, the numbers don't look great. I'm not going to sugarcoat it for you, but we do have to look at it more as a whole. And what I am going to tell you is that when we see, which you'll see Q1, hey, listings were up, inventory's up, sales down. Prices actually are the one thing that stayed pretty similar. So nothing crazy going on there. But remember that as we come off of Q4, we have January, we have February, March, which predominantly in the greater Seattle area is the peak of our spring market or in the middle of it. So we see a ton of new listings flood the market. And then we also have to take into consideration what the new construction's doing. Right now, we're seeing a ton of dadus, ADUs, cottages. I mean, one house, goes down, 3 more goes up on that same lot. And that's also creating a, big surge in the inventory. So just keep that in mind. At this point, I think the headlines, I've seen some ugly ones out there. They're a little bit more terrifying than they are clarifying. And we're going to talk about what happened in Q1, but also just what's happening really right now. All right. So as we're in the middle of the spring market, we're right here. And I like this time of year because March is such a good indicator of the spring market. So let's talk about what happened just now in March 2026, now that we have all the data. Now you're going to see that in Q1 there's a big increase of new listings from Q1 of 2025, but we do see another 20% increase in listings in March. However, what I do like to point out is that pending sales were actually up compared to not only March of last year, but also year to date. So up about 6 to 7%. So people are still buying homes. They're just being a little bit more, I would say, particular and a little bit more careful of what they're looking for. Now, with those pending sales also up, what was interesting was that the average percent of list price received was 101%. And this is for King County. So that means that on average, most homes that sold in March, last month, went above asking. So we are still seeing movement. Just from real life examples, I will say, it really just depends on the property. If you are priced well, in a good location, in a good condition, the home will likely sell and, pretty quickly. It's these cottages and these new constructions that are really skewing the numbers here. But from anywhere from waterfront listings, I've seen, a few come on and some are a little bit longer on market. Some have gone in 2 days. I've seen, a house that's not so special in Kirkland, 1.7 million, 2,000 square feet, not updated. It got 5 offers. It just depends on that specific property and location. But I can say that, those multiple offers and that busyness of the buyers, it's still there, very property dependent. So I don't want you to be scared of that because the reality is people are still going on with their life. Still, people are still buying homes, which is always a good thing. So, and we talk about, it kind of leads me into an interesting stat that we saw as well that should probably help ease some pain here, is that consumer activity and key boxes. So we're looking at showings, we're looking at the key box accesses for the listings. They were up in March over 20%, actually 24% from the month prior. So again, activity's there, people are out there. They're just being a little bit more strategic and particular about what they're looking for. As we go on, and that's predominantly, we see a lot of this movement in the market of, I'd say, 1.5 million and below, especially here in King County. If we talk about the luxury market, of course, things are going to change. In Seattle, we saw some movement in the luxury market. On the east side, it feels like pending sales actually were down quite a bit from the March prior. So 2 to 3 million. East side, we're seeing a little bit of a slowdown. However, same thing. If I take luxury homes in the greater King County, all of King County. I know that the luxury price point is going to depend on which neighborhood, but let's just say above 3 million for this sake, is that if you look at all the pending sales right now in the over $3 million price point, and pending sales are what is working right now. Buyers have found value in that home and price point right, in the last probably 0 to 30 days. So this is why this is the most current data to look at. But pending sales, over 50% of those homes above 3 million were on market for less than 18 days. You know, we do have some skewed because you go for anywhere from 3 million to 11 million to 6 million. So of course, some of those properties are staying on market a little bit longer, which skews it. But like I said, half of those properties are under 18 days. And the average price point for those were about 4 million. So people are still also buying in those price points. Again, it's really just positioning well and what neighborhood is really important. But as we see things, you know, hopefully start to keep the momentum going for the spring market, just know that I'm always here to be a resource. And whether you're in, you know, Kirkland or Woodinville or Seattle or West Seattle, I'm here to be a resource for you, as each market is so unique here in this area that it's really dependent on exactly where you are. So if you would like advice on what you're doing for 2026, if you're thinking about a move, I'm always here to be a resource for you.